A few years back, I sat down with an agency owner who had no idea her tax preparer had cost her $55,000. Not over a decade, over 4 years. The same deduction missed 4 years in a row. And you know what the wild part is? It was a deduction Congress wrote specifically for people like her. So let me tell you what happened. So she comes to us for a tax analysis. That's just a look back at the returns. We do this all the time. New agency owner wants a second set of eyes. We go through the last few years line by line, and pretty quickly I see it. Her returns are pass-through income. She's running a profitable agency, and nowhere on any of those returns is the qualified business income deduction, Section 199A. Now this has been around a while, so it's odd that it would be missed. But it's just not there. Year 1, it's missing. Year 2, it's missing. Year 3, year 4, same thing every time. 4 years of a major missed deduction. So now here's the human part of this, and it's the part I think about the most. I tell her what I found. I tell her roughly what it's worth, and she goes quiet. And I'm talking like really quiet. The kind of quiet where you can see something land on a person. So I ask her, I said, are you okay? And she says, yeah, I just got this pit in my stomach because that's real money. That's money that was hers, and it sat with the IRS for 4 years because nobody asked the right question. But then she takes a breath, she sort of laughs, and she says, no, this is a good thing. I'm going to go celebrate. I just found $55,000 I didn't know I had. And she was right, because we filed them in the returns, we went back, we claimed what she was owed, and the IRS sent her the money back with interest, right to her, where it belonged the whole time. And you know what? She's been a client ever since. So let me explain what this deduction actually is, in plain English, because if you run an agency, this really matters to you. The qualified business income deduction, Section 199A, came out of the 2017 tax law changes. And what it does is it lets owners of pass-through businesses deduct up to 20% of their qualified business income. So think of it this way. Pass-through just means the business income passes through to your personal return. So that's S corporations, partnerships, most LLCs, sole proprietors. If that's how your agency is set up, and for a lot of agency it is, this is aimed right at you. And actually, if you're a single member LLC, you do not scratch that. So it's 20% off the top of your qualified business income before you ever calculate the tax. And that might not be a small number. Now, I'm going to be straight with you because I don't do vague advice. There are limits. Above certain income thresholds, the rules get a little bit more complicated. The deduction can phase down or get capped depending on your income, your business type, the wages your business type pays, things like that. But generally, pretty much with planning, this is available to all agency owners. That's exactly the point. It's not always automatic. It takes someone who knows where the lines are and how to position your income and your structure so you actually qualify for as much of it as the law allows. And that is precisely where it gets missed. So how does a real tax preparer miss a deduction worth tens of thousands of dollars 4 years running? Here's how. Most preparers are historians. They take what happened last year, they record it, they file it, and they move on to the next return in the stack. It's compliance, it's the rearview mirror. But remember, filing return isn't a tax strategy. Filing return just means you wrote down what already happened. Nobody looked through the windshield and asked, wait, is this owner leaving 20% on the table? And when you're processing potentially hundreds of returns for every kind of business under the sun, a plumber, a dentist, a restaurant owner, an agency, you don't have the pattern recognition for any one of them. You're a generalist. You're moving fast, and the agency-specific stuff slips right through. And this is the whole reason my firm mainly works with agencies. When you work with a lot of agencies over a lot of years, and I've been doing this for more than 23 years, you start to see the patterns. You see the same structures, the same deductions that get missed, the same mistakes the generalist down the street makes every single April. I know what an agency's books should look like. I know roughly where your people costs should sit, at or under 55% of your adjusted gross income if you're running it tight. I know how agency revenue gets recognized, where the cash gets stuck, and which deductions agency owners qualify and routinely never claim. And that's what I call institutional knowledge. And you can't fake it across 40 different industries at once. You get it by going deep in one industry. That $55,000 wasn't a magic trick. It was somebody finally sitting across from her who actually knew the agency world and knew to look. I started this firm after 17 years as a New York City cop, and I'll tell you, I still get the same rush helping an agency owner keep more money that was always theirs. So here's what I want you to do. If you run an agency and you've been with a preparer who files your return and then disappears until next April, get a second set of eyes on the last few years. That's all a tax analysis is. We look back and we tell you the truth about what we find. Maybe we find nothing and you sleep great, or maybe we find your $55,000. Either way, you'll know. All right, before you go, if you're an agency owner and you want to keep more of what you make, I've got two things for you. First, grab a copy of my book, The 12 Biggest Tax Mistakes That Cost Agency Owners Thousands. It breaks down the exact mistakes I see every day and how to avoid them. Second, if you want to see what this looks like for your business, get a free tax analysis. We'll take a look at what you're doing now and show you where you might be overpaying. And if this video helped you, make sure you subscribe so you don't miss future strategies on tax planning, cash flow, and building a more profitable agency. I'll see you in the next video.